Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Really excited for today's show. And we've got the one and only Rod Khleif with us. So, Rod, how's it going today?
Good, brother. It's good to see you again. It's been a
Good to
long
see you
time, man.
too. Yeah,
Yeah.
yeah. I was getting ready for this call. I was just kind of reflecting. I went to one of your events. It was the last time I got onto a plane before COVID shut everything
COVID?
down. It was
Oh,
Los
wow.
Angeles. Yeah.
It was
So,
LA. Yeah,
yeah.
wow. That
But
was a long time ago. When COVID hit, I had
mhm,
800 people scheduled for Orlando, and I'm like, holy crap, what are we
yeah.
going to do? And I immediately shot a video in my backyard with my phone, and I built a
Mhm,
video studio here at my compound. And now we're pretty much all virtual.
yeah.
It's just easier. It's
Oh, it
less
is.
expensive. And in fact, it's interesting. I was supposed to be in LA the end of January and doing
Mhm.
another live event. And we track our ticket sales. I was supposed to be at about 200 and we were at 18. And I just said, nope, we're done. I'm not going to spend
Yeah.
100 grand to not have people. Yeah, I think it's a sign of the times. There's a lot of fear
Yeah.
out there. And I think that'd be a great thing to talk about today as we
Yeah, there is a lot of fear, but you throw great events. And before we launch in, I know you have a boot camp coming up in January,
virtual.
but
Yeah, virtual boot camp.
yep.
I teach people how to buy apartment complexes and other commercial real estate. And
Hmm.
like I was telling you, Brian, we were talking about, some of the other thought leaders in the space. And we did an analysis, and my
Hmm.
students, my warriors, my coaching students own more than all the other people doing what I do combined. My students are close to 300,000 units
It's a lot of
and under
units.
my tutelage, which just blows my mind, candidly. But we're also
Hmm.
doing other asset classes. I mean, senior
Yeah.
housing, student housing, self-storage, mobile home parks, you name it. There's just incredible opportunity right now, brother. I
Yeah.
mean, there's so many deals in trouble, so many operators that are
Hmm.
over their skis with expenses going up, with adjustable rate debt and everything
Yeah.
else impacting it. It's a fantastic time if
Yeah.
if you're thinking of a side hustle to get into this business. And my boot camp's $47 and I don't
Yeah.
sell anything there, so no excuses. Okay, if you're interested, go to rodslinks.com or text the word links to 72345.
Okay.
Again, rodslinks.com or text links to 72345. And if the price is more than 47, just DM me. All my social medias, there's a bunch of free resources
Hmm.
there. Just DM me and I'll get you that
Awesome.
price. And it comes with about $3,000 worth of bonuses. So again, no excuses. If you're interested in real estate, it's kind of a no-brainer. Thanks for letting me
Yeah.
plug it, bud.
Anyway, for those listening, what he just said is all going to be in the show notes. So you don't have to push the back button a little bit to write those down. But in the show notes, we'll have all that information. So, yeah,
Thanks.
Rod, let's talk about fear in the marketplace. What's your take on, where we're at right now, where we're going? And I know last time you were on the podcast, I know you talked a little bit about your history losing money in the great financial crisis.
Oh, sure.
Any parallels there? So,
So those that don't know my story, I lost $50 million in the 0809 crash.
mhm,
And a lot of what I'm known for talking about is the mindset it took to have 50 million to lose in the first place. And probably more importantly was the mindset to recover from that to the success that I'm blessed to enjoy today. It was a completely different environment back then.
yeah,
Okay. I mean, back then, it was the commercial mortgage-backed securities that caused that crash.
yeah,
If you could fog a mirror, you could buy a house. There were people
mhm,
working at Wendy's. They had buying $80,000 houses, with stated income loans and this horrible debt, really bad debt that they placed because they were making so much money. And,
yeah,
it's interesting. After I lost that 50 million, I actually started a litigation support company out of the ashes of that to help people that were losing their homes. I built law firms in
mhm,
5 states and we saved thousands of houses. What we would do is we'd stop the foreclosure with litigation. And then I had a
mhm.
team of 60 people here in my Sarasota office doing loan modifications. And yeah,
Interesting.
so that's kind of just that reminded me of that. And by the way, the guy that bought it from me, I met with him today, and there are
Mhm.
a lot of foreclosures again. He said they're as busy as we were in 2009 and 10, which is kind of interesting. Yeah. So a lot of fear and there's a lot of struggle in the marketplace. I've got beautiful assets, and some of them are struggling even because
Mhm.
people are having trouble paying the rent. Our delinquencies are up, vacancies up, and thank God I've got really good debt on my assets.
Yeah.
But the ones that I purchased after my last partner got me in a couple of bridge loans that are a problem. And that's what's causing a lot of
Mhm.
these problems for operators is
Yeah.
they got debt at 3% and now it's at 8 or 9.
Mhm.
I remember looking at an asset where the reserve payments for the lender were $8,000 a month. They went to 80,000 a month.
Oh,
I
geez.
mean, you can't make that work. But the deals are out there. It's extraordinary because
Mhm.
we've got an asset in San Antonio. In fact, we just did the asset management call on it, and it's 200 units on a lake. It's beautiful. The complex right next door sold for
Yep.
43 million. Bank owns it. It's down to 28 now. It doesn't even make sense to us until it gets down to 24. But
Yeah.
that's what's out there right now. Okay. And it is going to come back. There's a lot of
Mhm.
scuttlebutt that the rates are going to come down next year and maybe even
Yeah.
come back to, close to where we were before. Who knows? I mean, Powell and Trump are at each other's throats, but who knows? But I'll
Yeah.
tell you something, those of you listening, if you have a job that's in front of a computer, like,
Mhm.
tech, IT, even administrative, you better be thinking about reinventing yourself because, I don't know if
Mhm.
you heard Elon Musk's latest interview on Joe Rogan. It's a really interesting, quasi sobering interview, but
Mhm.
he says most of those jobs are going to be gone before you freaking know it. Okay.
Yeah.
And we just met with a consultant that does AI implementation for two of my companies and just literally today. But listen, if you are in that field, think about reinventing yourself. Don't wait till the hammer
Yeah.
drops. Okay. To start that side hustle now. I think there's going to be incredible opportunity to buy businesses. Senior housing is an incredible opportunity. There's 10,000 people a day turning 65. I'm one of them. They own a lot of businesses, right? And so there's going to be an opportunity to buy businesses as well. But you look at some of these tech companies, there have been massive layoffs already.
Yeah.
Amazon, Facebook, they're laying off already. Of course, they're on the forefront of this stuff, but
Mhm.
it's going to continue. It's going to trickle down to other companies here. Elon said within 3 years, most of those jobs will be gone.
Yeah.
So if that's you, I'm sorry to scare the shit out of you, but just don't. I had to reinvent myself, and
Mhm.
we were just talking about that, and
Yeah.
COVID hit. What we're gonna do? I'm in my backyard shooting my video for my event, and I'm reinventing myself a little bit right now, just
Yeah.
because there's a lot of fear in the marketplace. But yeah, it's a time to reinvent yourself. And,
Yeah.
and listen, it's scary, but it's also exciting. Okay, because
Yeah.
with crisis comes opportunity.
Yeah, absolutely. I got into multifamily 7 years ago already, but
Nice.
I know a lot of people in COVID, that was a time where a lot of people had to reinvent themselves, just like you mentioned. And, a lot of people turned to commercial real estate at that point, and, many of them have done very well since.
Yeah.
So,
No, sure. No,
yeah,
there's no better asset class than real estate, period. I mean,
yeah,
what can you buy that someone else pays for? There's a reason 90% of the world's millionaires either made it in real estate or put their money in real estate because of the incredible tax benefits as well. But yeah, no, it's
yeah,
crazy times we're in right now with AI, with the political scene. Don't get me started. The unfortunate division in this country, but
yeah.
thank God it went the way it did, in my opinion, or
I
I'd be
mean,
in Costa Rica right now.
you're talking rates, and I mean, it's kind of interesting. Yeah, Powell and Trump are at each other's throats, but we
Mhm.
know who's going to win that.
Yeah.
I mean,
Well, the problem is he appointed Powell. So it's a little black eye that he's got there. But yeah, no, I mean,
yeah,
ultimately, Trump pretty much succeeds at anything he does. I'll tell you something. Let
yeah.
me give you another little onerous thing, though.
Hmm.
If the Supreme Court does not reverse that decision that some appellate court had on his tariffs, if
Hmm.
they take away his leverage ability to use tariffs to bring other countries to bear that have been screwing us for decades, we could be headed for some real pain in this country
Hmm.
because that's the only way I can see that the national debt's going to get handled. That or
Yeah.
production in the country.
Back to the fear issue, what do we have to hope for coming up? When you look ahead and look for the bright spots, where are those bright spots?
Well, there's incredible opportunity right now,
Hmm.
Brian. I mean,
Yeah.
if you were ever going to get into this business, it is right freaking now. We could see the greatest transfer of wealth in our lifetimes next year.
Yeah.
The end of this, well, we're at the end of this year, like next year, the year after, because there's just a lot of carnage. There's a lot of operators in
Hmm.
trouble, a lot of deals trying to be sold for the debt or they're being taken back. Lenders have been kicking the can down the curb in hopes that
Yeah.
things will stabilize, and they're doing lots of loan modifications, lots of deferrals. The catchphrase with lenders is extend and pretend, but they're starting to foreclose now, and we're going to see deals at auction. There's like $1 trillion of commercial debt coming due.
Yeah.
Okay, so I'm going to tell you, if you're listening, if you've got over 250,000 in a small or regional bank, I would reconsider that. Open up a
Hmm.
different account name. I've got my money spread out over 80 banks. There's this company there's this bank that does that for you.
Hmm.
They don't put more than 250 grand each bank because we're going to see bank failures. I promise you.
Yeah.
Now they'll likely, well, let's hopefully get gobbled up by the big ones. But the bottom line is there's $1 trillion in commercial debt coming due. And if one of these operators is in that situation, they have two options. You
Yeah.
get a refinance or sell. Sales are down 90%. Refinance is damn near impossible with the rates where they are.
Hmm.
And because they have to meet what's called debt service coverage requirements. They're looking at the property's ability to service the debt. And that's just a real problem. In many cases, they have to put a lot of money in, which they can't do. And so again, tons of opportunities coming
Yeah.
for discounted properties, like that example I just gave you in the one next to ours that we're keeping an eye on.
Hmm.
So, and there'll be opportunities, like I say, to buy businesses. I think, it's an exciting time in that regard if you don't get
Yeah.
caught up in the fear of it. And I'm in a lot of cash right now in the hopes that I can capitalize on some of this stuff. And I'm getting into senior housing as well. There's, like I say, 10,000 people a day turning 65. I'm one of them. And it's called the silver tsunami.
Hmm.
And, so I'm buying my second assisted living facility. I'm going to South Carolina next week. I intend to buy 10 in the next 12 to 18 months. And that's the plan.
So in the last 2 years, I've purchased 4 properties, and I wish the number was higher, but there's not a lot on the market. But everything that we've purchased has been something that we looked at and basically said, here's our price. And we just wait,
Hmm.
wait for that price to come down, wait for that price to come down. And 6,
Are
8,
you
12 months
geographically
later,
specific or where are you?
we're Salt Lake City.
Okay. And
Yeah.
and your assets are in Salt Lake City?
Hmm. Yep.
Okay, fantastic.
So
The
go
most
ahead.
successful operators I see are the ones that are geographically specific, like you are, Brian.
Yep.
Because you can go out there, you can kick it, you can look at it, you can raise hell if things aren't right. It's these assets that are out of town, unless you got boots on the ground that's really competent,
Yep.
that struggle, candidly. So yeah,
Yeah.
I had a bad situation with an ex-partner. Oh God, don't get me started. Cost me millions and millions of dollars. Very nefarious guy, and I had to step in and try to asset manage these assets that we had in 7 states, and I regret doing them. I mean, I
Mhm.
learned the hard way
Yeah.
that we should have stuck with one market.
I'll say the same thing. I mean, I focus on a market right now because I did the same thing. I still have assets in 8 different states.
Oh, you do? Wow.
After trying to manage some of those and taking over management on some of those, I realized that we've got to consolidate. We got to have everything
Well,
together.
he and I got together and we bought 23 apartment complexes in 7 states, and
Hmm.
and I hadn't done a lot of large apartments yet,
Hmm.
and I learned the hard way. He had a lot more experience than me, but what I discovered
Hmm.
because I had to step in asset management, I had to step in for about a year, and I saved some of them. Some of them are still in trouble. I had to
Hmm.
step back. I just couldn't do it anymore. But what I discovered, like I said, was that the operators that stay in one market and I ideally vertically integrate as well, where they have their
Yeah.
own property management, they have their own construction company. Those are the most successful operators in our business by
Yeah.
far.
That's next step for us is vertically integrating, with what we
Mm,
have.
good,
But yeah.
good for you. Good
So
for you.
I saw the exact same thing, looking at, people who were, operating at very high levels. Focus. There's something about focusing on one specific thing. It
Hmm.
doesn't matter what it is, but when you focus on one specific thing, you tend to see a lot better results. So,
Right. It's the focus on one market for sure. I mean, there are some big, very reputable, very impressive operators that are in trouble. I kind of get this skinny because everybody knows everybody, but and the
yeah.
water's going out and we see who has no clothes on at this point. And
Hmm.
again, with crisis comes opportunity, and the biggest money is made in times like that to be a
Hmm.
contrarian investor. This is when the real money is made.
Yeah.
And so, if you can push through the fear, this is when the deals are going to be. And
Hmm.
so, like I said, that one property, 43 million down to 24 is where
Yeah.
we're going to get it if we get it. And,
Yeah.
and it's close. But even these senior housing facilities, I mean, COVID decimated them. And
Hmm.
so there's real opportunity to buy these. They're half full or they're even completely empty. I've got one that's completely empty. We're
Hmm.
redoing it. But there's such a huge tidal wave of these people retiring that the
Yeah.
opportunity it's pretty much a slam dunk. It's
Hmm.
not a hard sell for me to raise money for these. I raised the money for the first one in about 3 days.
Yeah.
So, yeah. And I've got a waiting list for the second one. So,
Yeah.
yeah. But anyway,
Awesome.
so
Well, what
yeah.
markets are you in right now?
So right now I'm still in
Hmm.
6 of those 7 markets. So I'm in Texas. I've got assets in San Antonio,
Hmm.
Dallas, Houston. We sold our one northeast of Atlanta.
Hmm.
Ohio, got assets in Ohio, Indiana, sold our assets in South Carolina, got an asset in Nashville,
Hmm.
sold our one in Florida.
Okay.
I'd love to buy more in Texas and Florida. I really, love
Hmm.
both those states. I love Ohio too, parts of Ohio.
Yeah.
We sold one of our assets in Dayton, Ohio.
Hmm.
That's a funny story, or not funny, but it was 101 units. About 3 months after we bought it, got destroyed by a tornado. I mean, wiped out. Nobody died, thank God. A couple of people had to have surgery. Thank God, no kids got hurt.
Yeah.
But they had to completely rebuild it, and we got about $600 rent bumps, which was a 10 to $12 million increase in value on 101 units.
Man.
Incredible.
Yes.
We made some money I had a fire in my Nashville asset. 22
Hmm.
units went down. Thank God nobody died there. But yeah, we've got a brand new 22 unit.
Hmm.
And we did well on it. The insurance, took care of us, but it does impact the rates though. That's the only
It does.
caveat. But
Yes.
yeah,
It affects
but
resale too. I mean, because you have to give the loss runs to whoever's buying, and they're going to have to see
mhm.
that. But
Exactly. No,
yeah,
exactly. No, it sure
insurance
does.
does. I mean, that's kind of a lesson I've learned over and over again. You got to be well insured. When I first got into the business, I remember somebody telling me, or not if a fire comes, it's when. He's like, if you're in this business long enough, you're going to have
I've
fires.
had so many. I've
Yeah,
had so many. I lose count.
we had
Uh,
3 last year that were
wow.
claimable on insurance, and
Right.
a handful that we just like, okay, 15,000, so there are a
Yeah.
couple that we've just fixed ourselves
Well,
without telling the
we
insurance
have the
company.
tenants get insurance now. We have the
We do too.
tenants get insurance, and we
Yes.
use that. We just had a fire at the same building, same
Hmm.
complex in Nashville, but it was just in one unit, thank God. But it's $100,000 limit,
Hmm.
and we're going to use every bit of that 100,000. I've got
Yeah.
it. Oh, by the way, if you're listening and you ever have a big claim, always get a public adjuster to help you.
Hmm.
You'll always make more money. They basically are in your camp when you're negotiating with the insurance company. They always find more than you think
Yeah.
that's there. I had hurricane hit my compound here in Florida. I have 6
Hmm.
buildings, and I settled for just under $1 million
Wow.
because I got a public adjuster. So I got new roofs, new paint, new pavers, new kitchen. Yeah,
Hmm.
but then Milton and Elaine came and destroyed my dock, and I had to pay for that. That was 60 grand.
Hmm.
But yeah, my dock ended up looking like something out of a Dr. Seuss book. You got to walk like this, and you got to walk like that. Yeah, it was funny, but it's been rebuilt now. But yeah, no, listen, people are like, oh, I wouldn't move to Florida because there's hurricanes. Listen, if you get hurt in a hurricane, you're a dipshit because you got plenty of notice. You just leave,
Yeah.
okay? That's it. When my kids were young, we'd go to Disney. They
Hmm.
loved hurricanes because we ended up in Disney.
Yeah.
But and a tornado, that's another story. Earthquake, that's another story. But hurricane, you're an idiot if you get hurt in a hurricane because you can leave.
Yeah. I mean, you see them coming days out. So, but yeah.
Exactly.
Well, awesome.
Exactly.
Well,
Listen, if you don't mind, if I'd love to plug my podcast as well, only
yeah, absolutely.
because it's the largest really in the world now for real
Hmm.
estate, commercial real estate. We're pushing almost 30 million downloads, which doesn't sound like a lot, but compared to like Joe Rogan or something like
Yeah.
that. But I'm talking about the reason I wanted to plug it is I'm talking about other asset classes as well.
Hmm.
It's not just multifamily anymore. I've got, talking about senior housing. We're talking about, self-storage, industrial flex
Yeah.
space, mobile home parks. And so there's a lot of value there. So if you have an interest in real estate, you can kind of get a taste for other things as well.
Hmm.
And it's called Lifetime Cash Flow through Real Estate Investing. And if you go to that Rod's links, my podcast link is there as well. And if you're driving, text links to 72345 because there's a lot of free resources there, a ton of free books.
Hmm.
There's a goal setting workshop. People spend more time planning a Christmas party than they do designing their lives. Doing your goals is designing your life, and it's there. It's free. I'm not going to try to sell you anything. It's a guide you can download. So there's just a ton of great stuff. I think you'll really
Yeah.
enjoy it. I'm
Awesome.
proud of it. Yeah.
Yeah.
Thanks.
It's a podcast. Honestly, when I got into this business, there were 2 podcasts that I listened to religiously, and yours was one of them. So,
Oh, that's kind of you to
um,
say that, brother.
back
Thank you.
in I think 2017, 18, that's when I started podcasting.
That sounds about
Um,
right.
yeah.
Yeah, I used to tell people early on, I'll never sell you anything because I just wanted
Mhm.
to add value. That was my
Yeah.
focus. Let me add value. I'll never sell you anything, and I never intended to. Now I'm a freaking liar because I sell everything. But I never, you want to make God laugh, you tell him your plans, right? So,
Yep.
yeah. But anyway, yeah.
Yeah.
Thanks. I'm really proud of it, and that's why I wanted to plug it for a second.
Awesome, awesome. Appreciate you. And a couple things just to close out here.
Hmm.
Great discussion. One question I love asking everybody: if you have to give advice, which you do very frequently to people who start, but if you had to give one piece of advice to somebody who's just starting out on a multifamily journey, what would that be?
Get your ass to my boot camp. It's
Yeah,
47 freaking dollars and I don't sell anything. It's
yeah,
16 hours of training. But listen, bottom line is educate yourself and
yeah.
don't get caught in analysis paralysis. Analytical people are very successful in our business because it's primarily empirical. It's numbers.
Hmm.
So you need the analysis part, but you also need to build relationships. And the best partnerships
Yeah.
I see are an analytical person with an outgoing person. Obviously, I'm
Hmm.
the mouthpiece in my relationships, but I've partnered with CPAs and whatnot. But get out there and get educated and then just take action. Don't sit there and analyze it. And I guess I made the A long by intention. Don't analyze it and just go do it. Design your life get juice, because you got to get hungry. You got to
Yeah.
build, you got to create that burning desire. And the only way to do that is to get your goals in front of you, make them compelling, and why the goals are a must. You spend an hour with me, you'll leave so motivated you'll be coming out of your skin. So that would be my advice. Start there, actually, because so many
Perfect.
people are comfortable and so
Mhm.
many people are scared and they have fear, they have limiting beliefs, and you've got to have the goals to push through that stuff, because the life of your dreams is just on the other side of some comfort.
Yeah, absolutely. Awesome,
Yeah.
awesome. Well, this is where I usually ask where can people learn more about you, but I
Yeah,
think you're going to say rodslinks.com
Rod's
and
links is it. Yeah,
yep,
that's it for sure. But
yep.
and if you're
And I,
driving, text links to 72345 and we'll send you that link. But there's a lot of
sweet.
free good stuff there. So
Awesome.
I've been selling a little more than I intended to, and I apologize, but I get excited sometimes, and I am proud of what we've done. Like I
Yeah.
said, my students, our program eclipses everybody else combined.
Yep.
So very
Well,
exciting.
you have given a lot of value to a lot of people, and I do appreciate that.
Thank you,
And
brother.
well, hey Rod,
Well,
appreciate you coming on this show today, and
thanks, brother.
look forward to seeing a lot more from you in the future.
Sounds good, buddy. Great to see you, my friend.